guys, I first want to apologize for the time that I've taken. It has been some time without recording. Sometimes I want to take my time also. So today, let me talk about time frame alignment, because sometimes somebody, if you are new to trading, you are like, how do I move from this time frame to the next time frame to the next time frame? So today I want to show you how you can stick to your time frames and to time frames, how you will just be dealing with two time frames, the higher time frame and the low time frame. So let's start with let's assume that you have seen a setup in the monthly. So, and I want first to talk about how to identify these setups. Here we are not going to be talking about EMAs, I'm sorry, but we are going to be talking about external liquidity and internal liquidity. So external liquidity is based on swing highs, and internal liquidity is based on fair value gaps. Fair value gaps is created when you see, like at this point, this is a candle, then we have another candle, and we have another candle. These candles did not meet. You see, this one and this one did not meet, so leaving this gap here. So this is what we refer as fair value gap. This is the gap. You see, we have the first candle here, the second candle, and the third candle. These candles did not meet, so giving us a fair value gap here. This candle and this candle did not meet, giving us a fair value gap. Where? Here. It created a fair value gap there. So this is what we call fair value gap. And what we want to see is when the can I draw really? I'm using a new computer, so, and it's giving me some headaches. I wish I don't know if I can be, thank God I can be able to draw. Oh, I'm really hoping I can be able to draw. At least. So this is what happens. So we have this high, and then formed this low, and then we take a high. This is external liquidity. When we take an external liquidity, we want the market to come to an internal liquidity, which is a fair value gap, and then go and take an external liquidity. Okay, now now that we have taken an external liquidity, where should the market come to? It should come to an internal liquidity, which is a fair value gap, and then we go to external liquidity, okay, which is a swing high. Then we have taken a high, which is an external liquidity. Where else should we come to? An internal. Okay, I'm having an issue drawing. We should come here again to internal liquidity, and then we go to external liquidity. Are we together up to there? That is something that a 5-year-old child can understand. So this is a very simple thing. If you concentrate on this, I don't think you're going to have an issue. So we are moving from external liquidity, we come to internal liquidity, and then we go to external liquidity. Internal liquidity, and then we go to external liquidity. Internal liquidity, and then we go to external liquidity. That is the whole thing that you're going to be focusing on. Nothing else. I don't want you to use anything else. If you want to be, just focus on this. Focus on this, observe it, and see. First, you have to observe it. Take a month off or a week off seeing this happening. So the next thing we are going to introduce will be time frame alignment, okay? Time frame alignment. So let's delete this. I hope you have seen. So we have said we are moving from, I really hope this is going to behave, from external to internal. So at this point, we had a break. So here we do not have an area that we can be able to. This is monthly, but I want to tell you, if you have a setup in monthly, you're going to look at it in the daily. If you have a setup in weekly, you're going to observe it in 4 hour. If you have a setup in daily, you're going to look at it in 1 hour. If you have a setup in 4 hours, you're going to look at it in 15 minutes. If you have a setup in 1 hour, you're going to observe it in 5 minutes. So this is what I mean. Let's go to weekly. Weekly, at least there's something, I think. So here, how did we say we identify swings? We said a swing is formed when we have a bearish and a bullish candle where they meet. If you have the buyers and the sellers, where they are, that is what we refer as to a swing. So at this point, you see, this was a buyers and sellers. So this was a high that was formed. So this is a very legit high. So by taking it, when we take this high, we have taken the external liquidity. So by taking this external liquidity, what was left? We have left a fair value gap, right? So this fair value gap, we have found it in weekly. Where will we be observing this fair value gap? We will be observing it in 4 hours. So in 4 hours, you are just waiting. You are waiting for the market to come to your area. The same procedure that you used, you checked with. You see, this laptop, I wish my other laptop. So what we will be looking at here is you are waiting for the market to come. This is what happened in 4 hours. The market broke through, Cindy. But you know this market is bullish. You are just waiting to buy. So you are going to wait for it to behave the same way. So you are waiting for the market to take external liquidity, which was taken here. I don't think you can be able to see well. We had a break of structure here. After this break, we want the market to come back and take the internal liquidity. And when it is coming to our internal liquidity, it's also testing the weekly. So we are in a weekly zone where we have broken structure to go to our direction. So this is where you enter. You see? You see how simple that is? I want you to go back and now start saying that. Like, start saying that in all setups. If you have not any, just go back and listen to what I just said, because this is a very simple way. And using the EMA as a conference to this, it makes it nice. So you don't have to depend on anybody. You don't have to email me, Lucy, teach me. No, you have all the information that you need. With this, you have all the information that you need. You do not need me at all. Just go back, listen to what I've just said, and use it that way. So that is how that happened. And that is the past. We cannot need the past. Coming back, I don't know, we can do a series on us taking trades now. I think that will be amazing. So the next thing, let's go to daily. For me, I prefer using daily. So that is where I am. So this is what is happening. I don't know if we can be able to get remote drawing. So this is what happened in daily. We have a break of structure here. We take a external liquidity. So when we take an external liquidity, we say the market comes back to internal liquidity. So where will you be observing this? Definitely not in the daily. You will be observing this in the 1 hour. So when we come to 1 hour, we want, again, a break of structure to our direction. This one, with this laptop, I cannot be able to expand, but you can see there is a break of structure and then a retest of that, and then we go. So that is, I cannot be able to expand with this. I don't know how long I'm going to be using it, but this one is tricky. The laptop is tricky. I cannot be able to maximize it. So that is the issue I'm having. So what you want is the market to behave the same way. To come to our area, we have external liquidity taken, and then to retest internal liquidity, and that is where we enter to our direction. So with time, you're going to learn how to incorporate EMAs so that you know I'm safe. You see, you're taking that trade knowing like I'm safe. Like it's not that it's going to be a guarantee owning, but you know that I've followed the rules are simple and I've followed them. I wanted to say a lot of things, but I think I've said something that is important. I was trying to film this more professionally using Loom, but I'm having an issue with it. But we are going to see how we're going to continue. So that is it. I hope this video helps you.